Good morning and welcome to the VSA Morning Miner. I'm Ollie O'Donnell and I'm joined by Paul Rankin. Paul, how are you today?
I'm well, thank you. How are you?
Yeah, all good, thanks. Looks like another busy day of news, so we'll get straight into it. Let's start with a short one from a client of ours, Apollo Silver. They've just announced that the drilling that began on April the 5th, they've now completed 9 RC holes, and the first batch of samples has been sent off for assay. So knowing that assay turnaround times have started to drop a bit in North America, hopefully we'll see some good assay results coming through in the next sort of 6 weeks to 2 months. Paul,
Yeah, this is
drilling
this is
some
just
holes that you've mapped before.
right. It's been out, and this is part of for this year is a 15,000 meter program here that they're getting underway, which is going to be about 10,000 meters of RC drilling and then 5,000 meters of diamond drilling. So it will be interesting to. It'll be primarily due to extension drilling as well as infill drilling on what was historic information, of which they have quite a lot of it. So we wish them good luck, and hopefully we'll find some nice high grade feeder zones too.
Yep, that historic work down to yourself. Right, full year results from Guanajuato Silver. You've got to be a little bit careful looking at these numbers on a full year basis, as the company only started production in October. So I think with things like cash costs and AISC, where you're lumping in the whole capex build into the full year, it's slightly skewed. But Paul, do you want to run us through those?
Yes, and as you say, because it's in ramp-up phase here, you wouldn't expect the cash costs and the AISC costs in order to be reflective of what would be steady-state production, and we won't see those numbers yet for another 2 quarters or so. At this point, they did generate $4 million worth of revenues in the fourth quarter on sales of just shy of 2,000 silver equivalent ounces, of which they got a price received of $23.35 per ounce. So with the AISC cost for the fourth quarter coming in at 33.31 and 73.70 for the year respectively, again we would see those coming down in the next 2 quarters rather dramatically, I would say. And they still had sustaining capex spend of about 2.2 million in the fourth quarter, but they still have 8 million cash at this point, including 1.6 million in unsold bullion. So I expect that we'll see nice recoveries here.
Yeah, and that cash figure had been announced towards the end of December, so I don't think any particular surprises in these numbers announced today. Worth highlighting, though, that the company has changed its reporting currency to US dollars from Canadian. So against our sort of published figures, there are some slight differences, but that probably explains most of it. Quite a lot of exploration drilling planned for this year, underground drilling at El Cubo, looking pretty inexpensive as well. They've got 15,500 meters planned at 2 areas at El Cubo, and that's just budgeted at about $1 million. And good progress being made at El Pinguico. Looks like they've cleared out the 4, 5, and 6 levels, and now they're down at the 7 and 8 levels, which is where that underground stockpile is located, and gives them a nice bit of cash flow before they get into production proper at that second asset.
And they need to clear out that broken stope material anyway in order to set up drill stations in order to test the still in place mineralization, down dip, and a long strike. So it'll be interesting to see what they can develop here during this year, 2022.
Yep. Okay, Paul, what else did you want to cover that you've seen this morning?
Well, we also had Shanghai Mining Club member and Mallee gold miner Firefinch release their quarterly activities report. A lot of it is information that they'd already press released in prior releases during the quarter here. They have production guidance for the second quarter or the current quarter at about between 17 and 20,000 ounces of gold at the Marilla mine. And they haven't changed the full year guidance to be at 100,000 ounces of gold. And they expect that they'll be at a production rate that should exceed 140,000 ounces rate during the second quarter of or second half of this year. So looking very positive for the year 2023 then as well. For the Goulamina mine, the lithium project now funded with joint venture partner Ganfeng. They did receive the 130 million in cash that was required, and now they have to proceed with the demerger of the Goulamina project from Firefinch itself into its own entity to be called Leo Lithium, and that will probably take some period of time yet, given regulatory and legal filings.
Okay. Paul, we've been asked by one of Andrew's followers to give a little explainer on Yellowcake. They had a quarterly update this morning. Not too much in the way of financials there, but I think the key point that they're trying to get across, they're trading at a discount to NAV. They think NAV on a sort of spot basis for their stockpile of uranium is £4.40 or so. Current share price is about £4. So it's about a 10% discount to NAV. I'd be surprised if you get closer than that for a company like this, which is effectively trading uranium and stockpiling it. And it was born out of the fact that over the last few years, there's been a massive overhang of uranium inventory, and major projects have been shuttered, meaning that exploration companies have effectively been pure options with very low chance of being bought online. And now that COVID has worked down that inventory, and they've been able to bring back on one of the major projects, MacArthur River, that market is starting to normalize and prices have started to rise. And that really accounts for the majority of the share price activity for Yellowcake over the past few months, with the spot price, I think now about sort of mid 50s to high 50s.
Yes, and as you say, it is a pure option essentially on the price movements of uranium Yellowcake concentrates, and the fact that they have succeeded in getting some deals with Kazatomprom for future delivery at lower prices from this point in time just means that they essentially continue to feel bullish about the prospects for being able to sell that in due course, that accumulated Yellowcake at a higher price from here. And but from that standpoint, you are taking essentially the price, you are playing the price risk on the movements in the spot prices from month to month and from week to week. So you have to be careful there.
Yeah, you're not really going to see much sort of outperformance against the spot price, I don't think, due to the nature of the business. And perhaps if you're particularly bullish on the uranium price, contracts like they've arranged become harder and harder to come by to get discounted uranium. And obviously, if we enter a sort of blow off cycle like in 2010-11. The exploration companies, which are the options, are going to massively outperform a company like Yellowcake, which was born out of the bottom of the market and designed to be sort of a more defensive play.
That's correct.
Anything else, Paul? Perhaps got time for one more.
Oh, just to say that I wanted to mention here the announcement too of Stavely Minerals ASX listed copper explorer in Australia. They have their deepest intercept yet on the Cayley lode in hole 182. It's a intercept grading 14 meters at 1.25% copper and 0.72 grams gold, and it's a full vertical 515 meters down, which is strong evidence here that there's probably going to be a underground mine to follow on from the near surface mineralization in due course at Stavely. And the Cayley lode will have its inaugural resource estimate completed here sometime yet this quarter, as these were the last assays coming in from the completion of the current drilling program. So I'm watching that one pretty closely.
Very good. All right, we'll leave it there. We'll be back tomorrow and Friday. Speak to them.
Very good. See you then.
Cheers.